What's going on, guys? So I want to make a quick little video, show you guys exactly how I trade options, specifically trading the Triple Q's ETF. So one thing I do want to focus on, if you're new to trading, I would not try to get involved in trading every single small cap, every single mega cap, every single tech stock, everything that's gapping up, gapping down. I would kind of stick to a couple of instruments, right? And in the beginning, just because of the price action and the liquidity is so good in things like the triple Qs as well as the SPY, you can literally make a good living, even part-time side income if that's what you're looking for, just trading the indexes and using options as your tool. So with that being said, we do not have to make things very complicated. As a day trader, we do not care what the ETF is going to do next week. We don't care what it's going to do next year, in the next quarter. We don't care about none of that. What we care about is the day-to-day price action, and what we're looking at is a specific set of rules, and we're going to follow those rules to a T. So depending on how big your account size is, I always recommend the more money you can put into your brokerage account, the better off you're going to be, because the less money that you have in your brokerage account, you're always kind of weary, you're always kind of a little nervous when you go into a little bit of drawdown, and it allows your emotions to kind of play an effect on you. So when you are trading options, leave your emotions at the door. You need a trading strategy. I would definitely recommend supply and demand, some price action, a couple of moving averages, and I think you're going to be okay. If you want more information, definitely join my Discord. Myself and the rest of the guys can kind of help you out. You can kind of see what we're doing. But with that being said, why I like trading the triple Qs is because they move on a day-to-day basis, guys. So if Tesla or Amazon is up huge on the day, you know that the triple Qs are going to be up. If Apple and Microsoft and Tesla or Nvidia semiconductors are down on the day, you know that the direction of the triple Qs is also going to be down. So with that being taken into account, what I like to do is I like to start off by sitting out the first 30 minutes of the market open, and then I like to pull up the 1 hour time frame. What I'm going to do on the 1 hour time frame, and you can kind of see that trading range, that little bit of that box that I have on my screen here with this top line and this bottom line here. This is going to be the first 30 minutes high and the first 30 minutes low. What I'm then looking at is going to cross reference that with the pre-market high here and kind of tell myself if at any point in the day we can kind of break that price action, I want to get long. Now, being that we're a day trader and looking for a scalp, we're not looking to get 200, 300, 400% returns. Although those trades do come, it's a lot easier to take 10, 15, 20% very quickly and have a higher win rate percentage versus trying to hold out and get those 1,000 point gainers. Now, I know when you look around on social media, everyone's, posting up the big gains. People talk about, they don't want to take 10%, only 100% or nothing. Guys, those guys are a bunch of those guys are just a crock of shit, to be honest with you. Like, have I taken trades where it's ran up 100, 200, 300%? Of course, but I'm not looking for the 100, 200%. I'm just looking to get in and take 10, 15%. Now, things change because, for example, let's say an options contract on a 0 day till expiration on the triple Qs. Let's say, I'm just for the sake of the video, let's say it cost $100. And let's say that contract runs up 10%. That's only $10, right? It doesn't seem like a lot of money at the time. So this is where a newer trader can be like, man, well, I bought an options contract, it's up 10%, but I'm only at $10 versus, I seen someone else, they made, 10% and they just made $500. That comes along with a bigger account size. So let's say, for example, those contracts do cost $100. And let's say, for example, I buy 10 of them, right? So if I now have 10 of those contracts, now I'm invested into this trade for $1,000. If that same trade runs for me 10% and runs for you 10%, but you only have one contract versus I have 10, I'm going to be making $100 to your $10. So I hope that kind of makes sense. So never let, the actual dollar amount kind of get to you. If I tell every new trader like this, if you have a small trading account and you can consistently see trades and take 10% out of the market each and every single day, that's going to start to compile, it's going to start to compound, and you're going to start to be able to trade a lot bigger. If you can make, and again, for the sake of the video, right? If you can make $10 a day, well, at the end of the week, that's $50. At the end of the next week, that's $100. At the end of the month, that's $200. So now instead of you just having, $1,000 trading account, now you have a $1,200 trading account. And then you can kind of scale up your sizing a little bit. Maybe you can afford to buy 2 contracts at a time. So now that $10 becomes $20. This is the power of compounding when it comes to day trading. Now, a lot of times guys start off with $1,000 or, $5,000, and they try to go in, 50% of their portfolio. If you got, $5,000 and you're investing $2,500 in an options contract and you have no idea where the hell to get out, and you take a nice 50% clip on that, that's going to be detrimental to your trading account, and you won't be in this business for that long of time. So the easiest strategy that I would recommend if you're just starting out learning how to trade options, stick to the SPY, stick to the triple Qs, mark out the first 30 minutes highs, mark out the first 30 minutes lows. Don't expect to make 100% on your trades. Look to make 10 to 15%. If you have to do this 100 times and make 10% and make $10 100 times, I would recommend getting the practice, the screen time, and the knowledge and the comfortability level before you start sizing up. Okay, I would never recommend for anyone to start off paper trading. That's a completely different ballgame. There's no emotions attached to that. You need to get in there, get dirty, and play with real money. So that's why I recommend, if you have a small account or maybe you don't have a lot of money, you're not looking for big gains. What you're looking to do is compile and compound small wins, and you're looking to grow that trading account. Now there's some theories out there, and some Twitter traders that like to, if you have a small account, what you have to do is full portfolio into a play and kind of, double that account 1, 2, 3 times, and now you can kind of dial back. I think that that's bullshit. I think that that's signs for a disaster and a sign for, kind of blowing your account. Who wants to consistently reload their account with $1,000, $1,000, $1,000, $1,000? I'd rather make $200-300 a month for the next 6 months rather than load up $1,000 each and every single month, because I'm trying to double my account each and every single month. Guys, if you're more interested in learning how to trade options and want access to all of my strategies, definitely visit evolutiontraders.com, become a lifetime member. We'll get you guys all dialed in. Also, make sure to subscribe to my YouTube channel, as well as giving me a thumbs up on this video, and I'll see you guys all in the next one.